Okay, just doing a quick video after the close of trade Friday the 9th of April, and we had a really explosive day on Friday and finished on new highs at 1193. Just want to recap, this is my 4500 tick bar chart, highest time frame chart for my E-mini day trading, and just to show you how just over the last few days these exhaustion volume signals, I just keep on harping on about this, we get trend changes after we see exhaustion buying and selling, and you could have seen the rally into the close from the exhaustion signal prior. If we just go back a few days again, the red dotted vertical lines are the beginning of the day trade sessions, the grey dotted lines are the end of the day trade sessions. This is Friday's activity, Thursday, Wednesday, Tuesday, and you can see, we had a significant high 1188 up here after we had exhaustion buying at this point, with all these professional blue bars kind of coming into these highs, and you can see all of this distribution kind of volume patterns coming into those highs, and I talked about those after that day's trade. And then we came into the lows here, and we were able to bottom after we had exhaustion selling at this point here. We had all this bullish divergence at these lows, and the market kind of rallied and turned around. Now after Thursday's trade, I was looking for this exhaustion selling volume signal to be able to go short. We had another exhaustion buying signal, so after we've had an exhaustive amount of buying activity, the trend can change, and we had another one of those kind of early on in the day, coming up into this end of trend warning signal here. But later in the day we also had an exhaustion selling volume signal at this point here, coming into these this turning point at 1186, coming in here, and that's what allowed us to put in this final push at the end of the day. And as you can see here, coming into the close on Friday, we had again all of these professional blue bars coming into these highs, showing that the professionals are exiting. A lot of that because they're exiting at the end of the week, but also I believe they're kind of taking profits, starting to think about reversing and going short. And we've had this exhaustion buying at this point here, which will point to some kind of a turn in the marketplace sometime likely on Wednesday. But again, these are just helping me show the tradable swings in the E-mini based on buying and selling volume. Now I just want to go into the 1500 tick bar chart as well, because I think this was really kind of instructive to show at each of these lows during the day. We saw a combination of professional buying signaling that the professionals, as soon as we dipped into these lows, were kind of stepping into the marketplace and going long. So the first time we saw this at this cyclical turning point on the 1500 chart, you can see here we had a little bit of a breakdown by the amateurs with these Rambo patterns, and then the professionals stepped in with that blue professional bar with these kind of volume accumulation patterns, no supply, stopping volume. The market rallied again. The second time we hit the 1184 level, we had amateurs, I beg your pardon, kind of pushing this move with the Rambo pattern here. We had bullish divergence, and the market kind of took off again. But every time during the rest of the day, we kind of came back into these lows. You can see here, coming into these lows, 1185. At this point here, professionals buying at these lows, the market kind of takes off. Came again into the 1185 level, professionals buying at these lows, coming in for a final kind of third or fourth time here with profit-taking patterns, bullish divergence after we'd had exhaustion selling. The professional bar there at the low. As soon as the highs of these professional bars are taken out, you can see that that allows us to have a rally into this final push towards the end of the day, into the final rise at 1193. So that was kind of instructive for me, with all these professional bars at these lows, showing that we had strength throughout the day, and after we'd had that exhaustion selling kind of late in the day, that enabled us to put in this final leg up. For me, the best signal of the day came 4500 tick bar chart. We had an end of trend warning signal here, 1188. I'd been looking at that because I'd seen the exhaustion selling buying from the day before. We had a second exhaustion kind of buying signal coming into that turning point. We also had professionals reversing and going short, taking profits. And then when we came back down to the 1500 tick bar chart, it was a second cyclical turn after an end of trend warning signal. So for me, that's a low risk entry point, coincided with exhaustion buying, professional bars coming into those highs. Unfortunately, it was only good for about, I think the move was about 5 points top to bottom here, and then we had this exhaustion selling volume signal, and that kind of marked a low for the day, and we've rallied ever since. But it didn't allow me to take my entry there to go short at that point. Made 3 points on that trade. So there we go. That's what the tip bar charts were showing me there. Just want to recap on the oscillators. We're in really overstretched territory, but nothing new. This rally keeps on going. However, we're at pretty overstretched levels versus put call ratio oscillator, Trin oscillator, and so on. Trin oscillators positive 147, better put call ratio oscillator at 372. The highest reading that I've seen kind of in the last few years back in '88, where it just clipped over 400 at that oscillator reading, and then we had a sell-off after that. So I really think we're well, everybody knows we're in overbought kind of territory. We've got to see some kind of pullback, but Trin system has been long for a couple of days, which whenever I start trading against the Trin system, I always get myself in trouble. So this is consistently over this rally period. These long trades using the Trin systems have been the winners. All the losers, smaller the losers, kind of up along the ways, have always been the selling signals. And just lastly, commitment of traders. The professionals are negative 2.2% of total open interest. That's the S&P professionals that I look at for directional kind of moves. We've had our crash warning signal a couple of weeks ago. The oscillators ticked up a fraction here at 141 compared to the week before. I suppose my biggest worry here is this oscillator will just flatline at these elevated levels as a rally kind of continues. But I hate this bull market. I think everybody hates this bull market, but that's probably a good reason for it to keep on going. Let's see if there's some more fundamental news that comes out of Europe this week. See if there's any kind of, we've got Alcoa earnings and the earnings session kind of kicking off on Monday, so let's see if that's some kind of impetus for the market to start a down leg. But as yet we haven't seen it so far, so I'm not going to hold my breath. So I hope your trading is going well, and I'm also putting up another video on the site this weekend talking about why I trade the E-mini. It's just it's a 10-minute video. It might be helpful to some of you traders who are still trading stocks and forex out there. Good luck with your trading next week.